Hello, everybody. This is Tyler Jenks and Socrates on the Hyperwave Lucid Investment Strategies channel. And a lot is going on in Bitcoin. Um, Basically, in the last 45 minutes. Um, and we're going to get right to that. And our analysis will be pretty much live because I've been, as you know, fighting for the last couple of weeks with the weird feeling that this thing is going to break to the upside, not the downside. And I've talked to a lot of clients about it who are kind of waiting breathlessly to see what's going to happen in price. And the last I looked, it's looking pretty good for the bulls. And I missed the blog last night. Socrates took it at 8 o'clock going into the close, and a lot of very interesting things were happening. I did an earlier vlog with Tone Vase in the afternoon, which was I found very interesting. I love working with someone like Socrates or Tone Vase because what happens is it helps us bounce ideas off of each other live, things that we hadn't thought about or hadn't noticed on our own. And that happened yesterday with Tone. And then about 8 or 10 hours before that, I did one with Ugly Old Goat that was more fun than it was analytical. So it's been very busy for all of us. A lot of things going on. Socrates, how are you doing today?
I'm doing well. I am definitely very interested in the recent price action. As you said, just basically in the last maybe half hour, 45 minutes or so, we have seen some very significant action that I am watching with a bated breath myself after turning short-term bearish and expecting a further correction to continue on down. Now I am having to reanalyze and look at the positions that I have and see what will be the best way to proceed from here. And we'll be, like you said, pretty much analyzing everything live. All of the analysis that I went through basically 12 to 16 hours ago is now changed entirely, and that can happen with just basically a candle or two, and that is what we see here. So my outlook is changed very significantly over just the last 8 hours or so, and therefore the analysis that we'll be going through today will all be pretty much fresh and up to date, live. So
Great.
be excited.
This will be a lot of fun. I'm going to start with the screen share of the longer term. I've been looking at Bollinger Bands a lot recently, and I usually do, but it's usually an afterthought after I've done all my other work. But I think they're particularly interesting right now, and I'll show you why. And it depends on what time frame we're looking at. But I will start with the daily, and then I'm going to go up to the weekly. And I've got a lot on this chart, I know that, but that's okay. The big thing we're looking at right now is this candle taking off up to the 12,240 level on a daily basis. All of that just came very recently. I'm going to pull up a 30-minute chart. I'm sure all of you that are following Bitcoin closely know this as well as we do, but that 5 candle came out of nowhere. As we were preparing for this show, I was saying, this is stupid. We have now gone 20 candles in a row with no movement at the 30-minute level. So basically, that's 10 hours of going absolutely flat. And usually when that happens, take a look at what happened to the Bollinger Bands. As these are this blue area is the Bollinger Bands, with the top Bollinger, the bottom Bollinger, the brown line's the middle. And we had broken above the top Bollinger Band on a 30-minute. And usually when you do that, you correct back down definitely to the middle band, but almost always all the way down to the bottom. This one, I don't remember ever seeing this, went absolutely sideways. And as it's doing it, look what the Bollinger Bands are doing. At their widest point, it runs from 11.1 up here to 12.1, 1,000 points between the low and the high. By the time we go 20 periods, look what happens. It's almost like two parabolic SARs, and then you get squeezed in the middle. And unfortunately, we weren't doing our vlog an hour ago on this 3 candle, because I would have made the same point, that when you get squeezed in Bollinger this tightly, and look what happened. We came right to the midline, which is what you're supposed to do, went above and below it here, and on the 3 candle, we actually went below it for most of the body and closed right on it. Then we popped up from the mid to the top, and then we exploded. That's important to understand the way Bollinger works. If you go to the higher time frames, let's go all the way out to the week, because the week tells a very different picture. What we've seen on the weekly is that narrowing went all the way from December all the way until we bottomed and started up. And you can see how narrow the Bollinger Bands are here. Let me just show what I mean. Here's the bottom, and the top is right where these prices are. And then as you start breaking out and you start these runs, the bottom begins getting further and further away, and the top begins to expand. And we have gone on a weekly basis now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, walking right along that top Bollinger Band. And we haven't had a complete body above that band, which would suggest that we would go back at least to the middle and maybe all the way down to the bottom of the band. And you can see here at the end how far away the bottom of the band is. It happens to be at 1,300. That's how far this spread has gotten because of the persistence of this run. And so I've been looking closely, waiting for an entire candle to be above that top band. And number 7 back here was as close as you get. And the body is above it, but the wick was below it. And then we got this 8 and then a 9 sell, and we're right back into the middle of it again. So then it tries again, the price on a weekly basis. We come up and the wick touches the upper band on 1. On 2, we cut through the upper band, close above it, but most of the body is below it. And I thought, okay, here we go. Now we're going to get a candle 3 above it. And sure enough, candle 3 shot way above the upper band. But of course, that was the big reversal that closed under the upper band. But that wasn't enough. The 4 tried it again. And now the 5 is trying it again. But I don't believe that it is giving a sell signal here, which would be an entire candle above the upper line. If we get such a candle, and keep thinking we're about to, then you can expect a test of the center, which is all the way down at 6,962. And again, we're down below 2,000, 1,390 at the bottom of the Bollinger. This is very, very unusual action, but is one of the reasons I was setting my stop down at that 6,000, or my buy points above the 6,000. I've got a lot of other reasons to do that, but part of it was the center line of the Bollinger Bands. And now that's beginning to accelerate up, and it will be over 7,000 fairly shortly. So everything begins to expand very quickly with Bollinger once you get out of that narrowing that we just looked at. Tone and I went over in quite a bit of detail the monthly. There is nothing negative about this monthly. There is nothing negative at all in this chart from a technical point of view, except the asterisks about Hyperwave. Other than that, everything is fully bullish, and now the candle is really beginning to expand towards the upside, which it had not done. We had this big, what looked like a reversal on the 4, and now the entire body of this 5 is above the closing body of last week, and that's very bullish. We're also walking up this accelerated trend line, and that's all it is. This isn't a hyperwave line. Some people have been looking at it like it might be a hyperwave line. I don't see it that way. But in any case, it's an accelerated line that you don't want to break below. And we were below it earlier in this week, and this week just started, and now we've just shot way, way above it. So on the long term, on monthly, on the weekly, and on the daily, this is painting for me a very convincing picture that this is breaking out to the upside. I'm going to save the shorter time periods for Socrates because he's been doing so much work on them. But I've been telling people that this 9 worked perfectly in just saying, when I say 9, of course, I'm talking about it sequential, saying that the price is running out of steam and we need a little bit of a correction. Maybe just 1 to 4 weeks, and we got 1, 2, 3, 4 basically. This is a daily, so I'm sorry, I mean 1, 2, 3, 4 days, and then tried to go up, got a price flip, turned red, but the green 2 remained, another red candle, a green 3 remained, then a flat candle on 4, then a price flip again. So the daily is still, even with this recent action, not definitive to me. And this is where I wanted to talk a little bit about Bollinger. And this is only on the daily time frame. We've looked at the other time frames, but here's the daily. None of these candles are closing completely above the upper band of Bollinger, although they tried over and over again and then got rejected on this 8 candle, rejected again on the 9. The 1 came down through all kinds of moving averages. The 2 came down and pierced the midline. The 3 came down and pierced the midline. Both of them closed above it, which is this brown line. That's the kind of action that I would like to see across all time frames, not just on the daily chart. But on the daily chart, it's still saying that something is not quite right with the bull trend, at least on a daily basis. Because then we get a sharp move up, which should be a bounce off the midline all the way back up to the upper line. But that fails to do that. On this green 1 and this green 2, which becomes a red candle, this green 3 that drops below the full body of the 2 candle, we come back down again and touch the Bollinger in the middle. So it's kind of resetting, trying one more time. So what I'm looking at on the daily basis is for this to continue up above the daily, the upper band of Bollinger, which is sitting at 12,861 right now. We're at 12,241. And if we were to do that, a number of very important things would happen. One, on a daily basis, is we would be challenging the closing high of the highest candle, which was 13,880, but it only closed at 12,920, which is this candle here, the 6 candle. The 7 candle got as high as 13,355 before closing all the way down at 11,153. And since then, we have not challenged those closing highs or the opening high on the 7. But to get above the upper Bollinger, we're going to have to do that. And if we did it, what's going to happen, just like we looked on the 30-minute chart, is this is actually beginning to squeeze. Notice how if you don't keep making upside progress, the lower band begins to accelerate up. The upper is not accelerating up because all of this price action is above the midpoint. If we drop below the midpoint, then what will happen is the upper band will begin to come down. So all I'm saying is, even though I'm not very far away from reinstating positions that we took profits on at 8,800 to 9,000, but I am very close to making the decision to add to that 0.2x or 20% of X that we bought originally down in the mid 6,000s. I have not done that yet. And what I'm trying to decide now is, do I need a daily move or do I have to wait for a weekly? And I haven't settled that in my own mind. Also, notice the stop and reverse point where it's sitting right now. And to do that, I'm going to just take the sequential off for a second. So you can see that this is the stop and reverse point coming down. And basically it's gone perfectly flat, which is what Socrates and I have been talking about, but has not yet been taken out. That would occur about 12,300, and we're just sitting slightly below it as we went to the show today. That would be fairly significant to me on a daily basis. But what I'm really looking for on a daily basis to override even my weekly is a close above the upper Bollinger Band. So there's an awful lot going on the longer term. Every other indicator is positive. Consensio is 100% positive. All the Copics look good to me. All the ADXs on the longer periods look good to me. I have no significant argument with this bull market continuing if we can get a little bit higher than we are now. But the speed with which it's moving up, $730 just literally in the last couple of hours, is a fairly remarkable move. And it's beginning to affect other coins. Ethereum is back over 310 after struggling earlier today, and that's occurred basically in the last 45 minutes, and Litecoin's up over $1, and it was flat to negative about 45 minutes ago. So that's my view on Bitcoin. I don't have any conclusions other than the ones I've given you. I am not looking for a pullback here. I'm looking for this to keep moving up from these levels. And the question is it actually going to break out? And at what point will I begin buying more heavily than we did, even down at the $6,500 to $6,800 level? And with that, I'm going to get off and let Socrates work his magic.
All right, I will go ahead and throw it on screen share here and make sure to click my screen. Okay, so I was very much expecting some volatility to happen basically sometime today, and I was expecting it to be in the other direction than we got. I sent out some pretty bold tweets and made a post on TradingView with a trade setup, which showed a potential short selling opportunity in here, and provided a stop loss right about in here. And the bold prediction that I was actually pretty confident in was 4 figures within the next like 48 hours. So from right around in here, I was, especially right here, it looked like after this candle right here, right in here, created this, created another lower high, and we're really getting squeezed, like Tyler showed on the 30-minute chart. We were really getting squeezed tightly, and a big move was expected. That's based on that prolonged period on the lower time frames, which just show the price going absolutely pretty much nowhere. And also from this sort of triangle thing that I'm drawing here, which has a bear trend line against this bull trend line. And so I was expecting a big move to happen in the next 24 to 48 hours, and I was expecting the move to be to the downside because we were at resistance. Well, let me go ahead and zoom out and tell you why I was leaning so bearish. Most important thing to me over the last couple of weeks has been this high volume shooting star. For me, a high volume shooting star or dragonfly doji is the single best indicator of a short, medium, or long-term reversal. These will often come at the top of a long-term bull market, and it could also come at the top of a short or medium-term run. So this could really call a reversal for short, medium, or long-term bull or bear markets, especially when they're confirmed with high volume. I always think that there's a volume spike that starts the trend and a volume spike that ends the trend. And when you have a massive volume spike that is combined with a reversal doji, one so significant as this, that is something that I cannot ignore, not even a little bit. Furthermore, we were looking very, very closely at the parabolic SARS, and it looked like it worked perfectly on this week. And then after going through the calculation myself, hey Tyler, did something happen?
Yeah, my internet went out. Are you okay?
Yep, it looks like I am still live. I do see that you are no longer there.
Okay, I'll keep trying to get back on, but just continue, and I'll see what I can do.
Sounds good.
Okay, bye.
Bye. Sorry about that. Tyler's internet went out, so I am flying solo for the moment. Good thing that he went first. So it looks like this parabolic SAR on the weekly held bullish, and that's very, very important to me, these weekly parabolic SARs. This is one of my best ways to determine medium-term trend. And this would have told me to stay bullish, but we really took a very, very close look at what was going on here and realized that based on Wells Wilder's original calculations, it looks like this is not calculated properly. I'm still needing to do some more research, but we are making some really good progress, and I am getting to the point where I'm more comfortable using the calculation that we found in Wells Wilder's original text, more so than what TradingView is using. So it's TradingView showing the parabolic SARs is still bullish when calculated based on Wells Wilder's calculation. That would have broken on this candle and then gotten moved to 13,880 above this candle, and now it would be moving one step down. So this, according to my understanding of how the parabolic SAR should work, it did get broken on this candle following the high volume shooting star. So we've got this telling me that we've got a possible short, medium, or long-term correction coming. And then we've got confirmation from a broken parabolic SAR based on how I'm calculating it. Furthermore, we've got confirmation from the daily ADX rolling over after a big move, creating another lower high. So those are three things telling me that this thing is due for a major correction. And I'm really targeting like the 62 to 75 range was my highest probability. So I made some bold predictions and called for 4 figures in the next about 48 hours. And I am sorely mistaken, as it turns out. I mean, and this price still could go down there, but not. It doesn't look like it'll happen in the time that I allotted for it. And furthermore, the stops that I had set have been taken out. So even if it does happen, I likely won't be making any money on the deal. That being said, I'm always doing my best not to be results oriented. I'm always trying to see, was this a good trade? Was this a good call that I would do again? Or is that maybe a mistake that I should learn from? And I absolutely do like where my head was at. Everything was adding up. I was looking to higher time frames to determine my bias, and the weekly and daily were flashing strong sell signals that I could not ignore. And for the shorter time frames had gotten into a tight consolidation, which that is what I really like to focus on for really good entries. And that brings up a point that I can talk about that is very, very important to me that I haven't really heard many other people talk about. And that is the idea of trying to time volatility opposed to trying to time the direction. So that's something that maybe you need to think about that yourself and think about, does that make sense to you, or does it not? Focusing on timing volatility versus timing direction. So to try to help you understand how I think about that, so think about a volatile market that has consolidated for a long period of time, that has consolidated in a very tight range, such that the Bollinger Band is getting maybe a super squeeze. So picture that. We've got a volatile market, and it has been consolidating into a very tight range. That tells me that volatility is on the horizon, and that's what I really want to try to time, is the volatility. Seeing volatile markets consolidate into a very tight range tells me that a big move is coming. And basically, if that's the case, then you can flip a coin. It's 50-50 essentially. Ugly Old Goat refers to this as a virgin trade, one where the range is just so tight that the risk reward makes sense. And I really, really like that idea. And that's something that I have thought a lot about and experimented a lot with myself. So we get this really, really tight range in a volatile market after prolonged consolidation. That tells me a big move is coming one way or the other. So I can feasibly go long or go short, right? Because if a big move is coming and we're in a tight range, that means I can set a really tight stop loss on a long or a short. And if I'm wrong, okay, fine. I'm out of my trade very quick and I, take my lumps and move on. If I'm right, then the move should be much more significant than where my stop loss was set. If I'm setting a tight stop loss in a volatile market and expecting a big move, well, that should be giving me something like 5-to-1 or even maybe 10-to-1 on a risk reward ratio. And that's essentially what I was looking at here. Let's go ahead and pull up a post that took almost no time to age like a rotten egg. And that was this post that I made last night. So let's just take a look at what we've got. So looking at basically waiting. So yeah, anybody that's been busting my chops about this post, they must not have realized that I was waiting for a breakdown that never occurred. So if you're following this post, you never got into that trade. So people really like to give me a lot of guff for this, but now I'm just realizing that I was suggesting a stop order because that's exactly what I was looking at. I was already into a short in this area and I was waiting for that confirmation to add. Just as a tangent, anybody giving me some guff, take a second look, and if the market did move against, but the order didn't get filled, who gives a flying hoot? Certainly not me. So this is what I was looking at right here. Is I'm thinking big volatility is coming, and the higher time frames are telling me that it's going to be a correction to the downside. Again, that was due to the weekly shooting star, the weekly parabolic SAR, and the daily average directional index. These are some of my absolute favorite and strongest indicators that I was definitely giving a lot of credence to. So what I was looking at is if this sort of kind of bull trend line right here does break down and we retrace back below this area of support, then we can potentially get into a position. This won't offer nearly as good of the risk reward that I was kind of earlier talking about because we're waiting for further confirmation opposed to entering right here. If we're entering right here, the risk reward is going to be much better. If we're waiting for a breakdown, then the likelihood of success or the strike rate is going to be much better. So this doesn't have the slam dunk tremendous risk reward at 5-to-1 or better, but it does wait for further confirmation, and that waiting for further confirmation is exactly what would have kept you out of that position. So that is, I'm glad that we looked at that because now I don't feel quite so bad in the sense that I'm sure this post didn't turn out to be right, but it also shouldn't have cost anybody any money, and it was a very good spot to be taking a position based on being at resistance and in a tight squeeze, which suggested big volatility on the horizon. So essentially, I measured this move right here, this swing move, looked at the angle, how quick it moved, and looked at this channel and looked at this horizontal support and realized that if this did break down 11,100, then we really should be pulling back to about 9,000, and that should take about 48 hours. So that is where that call came from. Potentially that was a little premature. Maybe I should have waited for this to break down, but if I posted this right before going to bed, and sometimes with these 24/7 markets, you just gotta go ahead and make the call, but also add a note that confirmation is needed. So essentially, I'm really happy with this. To sum it up, I like to try to time volatility and buying into markets that are stuck in a range and chopping in and out. This is what I want to stay out of. And if I can wait until the market really squeezes tight and is ready for a big move, then it really doesn't matter which direction I go. That's my opinion. I could go long here and set a tight stop, or I could go short and set a tight stop. Either way, the risk reward is very favorable, and it's basically a coin flip when you're stuck in a tight range. It's going to go up or it's going to go down. So that is why I really like timing volatility. And also the other reason why I like that is the fact that when I'm in a winning position, I want to let that ride and I want to hold on to it for a long time. Conversely, if I get myself into a losing position, I want that thing to be open for as little amount of time as possible. I don't want to hold on to a losing position. It's a very, very, very fine balance of giving it enough time to develop and giving yourself taking on a little risk and given the trade time to develop. It's a very fine line between that and looking to cut the losers as short as possible, just like you want to let the winners ride as long as possible. So when I'm in a spot where I'm trying to time volatility right here, and I'm entering into a position, if it moves against me, it should do it quick. And I should get out of this trade like in the next day. Sometimes it'll even be in the next bar, like the next couple hours. For some people, that's a very, very uncomfortable feeling. And maybe that people would see this post and think I'm kind of an idiot because right afterwards, the price went to the other direction. Right after I posted this, it went to the upside. So some people might look at this and be like, man, this guy clearly has no idea what he's talking about. What a moron. As soon as he posted, it went right to the other direction. I'm totally counter trading this guy. But that's not at all how I think about it. That's actually kind of a good sign. This tells me I did a good job of timing volatility. It got me right out of my trade. I don't have to wait around for a week. There's nothing worse, in my opinion, than holding onto a position for a week or 2 weeks or a month or 2 months and then taking a stop loss. The longer you hold on, the worse it is for your negative positions, because now you're losing out on time, opportunity, and you're taking that stop. Whereas here, I'm just losing out on some money. I'm just taking that stop right away. I'm not losing out on any time. I'm not losing out on any opportunity. I'm able to move on to the next one. So when I get stopped out in the blink of an eye, that's generally something that I like. Of course, if it would have wicked up, taken me out, and then come right back in the other direction, then that wouldn't have been good, of course. But when it immediately goes against me and keeps going, that tells me I did a really good job here of timing volatility. And if this did break to the downside, which of course it could have, of course. And of course, there was a very realistic chance that it did. If that's what happened, then we probably would have gotten down to 4 figures in the next 48 hours, and I would have looked like a genius. So that's just kind of what happens when you're posting analysis all the time, is sometimes it's going to go against you. Sometimes you're going to look really smart, and it's up to you to realize that you're really never all that smart and you're really never all that stupid. You're just sticking to a game plan and you're sticking to a process and you're trusting in your analysis, and you're making these posts that sometimes, you know, go against, and when they don't, you really look like you know what you're talking about. So for today, definitely very, very intrigued by breaking through this trend line, and that very much has me reanalyzing the higher time frames to see if I should start rebuying and re-entering some long exposure. I still do have a significant percentage of my portfolio long. I don't know, maybe 25% or so. So it's somewhere in the 25-30% range. So I do still have long exposure. As this happened, my net worth did go up. I did get stopped out on the short that I was in, but it was a very small position. When I'm trading against the trend, I'm trading very small. The stop loss was less than 0.5% of my bankroll. And this increase, which has applied to about 20% of my bankroll, has more than made up for the stop loss that got taken out on the short sell. So this is action that is definitely better than more good than bad from my point of view, because at the end of the day, I've got more unrealized money in my virtual pocket, I guess you could say. So I am very intrigued by breaking through this trend line. That is the first thing telling me that I need to reevaluate and see if it's time to start aggressively buying again. Sounds like Tyler is asking himself the same thing. So we broke through a couple horizontals as well, which what's more important to me than trend lines? Horizontals. As soon as a trend line breaks, I'm going to horizontals and seeing is there some more confirmation that we should wait for? And if so, where is it at? And right now, the last area that I would be worried about based on this 4-hour chart is the $12,350 area. That's based on this horizontal. From this, we got that A, B, C. That B, the top of that is the next horizontal. Breaking above that would be very significant and would essentially give us that inverse head and shoulders that we were looking at, with the head right here and shoulder. That would, even though it's got this bearish tilt to it, if it breaks through the top horizontal, then I would consider it confirmed and valid. Might not be an entry. That probably wouldn't be an entry for me. I like entering much closer to these moving averages. Once they start getting away from them is when I start getting less interested. Even if Bitcoin does take off from here and I don't get to aggressively rebuy, then that's perfectly fine. I'm more than happy. I would love for that to happen. There's always going to be another opportunity for me to take a big aggressive position, and I would have some exposure to this market. So of course that would be a great thing. Some people that don't have any confidence in their ability to beat the market, that's when they start getting really, really anxious when the market starts moving against them. If they were selling in here and now the market's up in here and you don't have any confidence in your ability to beat the market, well, then you're going to be kind of freaking out and you're going to think, oh, geez, I just should have held on, or what, whatever you're going to be thinking. Whereas if you just know that it is possible to better the returns of the market on a consistent basis in the long run, if you know that that is possible and you know that you're capable of it, then you will know what entries to wait for and which ones to stay away from. And that is how you will be able to establish, some sort of edge. And you can only really have the psychological ability to do that if you're confident that A, the markets can be beat, and B, you can beat them. So if maybe you're in a boat right now where you're kind of maybe not really trusting your abilities too much, and you are really kind of anxious and maybe have been losing to the market, then potentially look at drastically decreasing the amount that you're trading with. Just go for anybody in that position that isn't consistently beating the market, that doesn't really know what they're doing. I'm always going to be telling them to dollar cost average and take a very, very, very small amount of your money and then try to trade with it. If you've got $10,000 and you're trying to enter and exit the full roll, and now it's dwindled down to 7,000 and you're freaking out, well, take that $7,000 cost average into Bitcoin. If you're not familiar with how to do that, I've made an in-depth post on TradingView that goes over multiple dollar cost averaging strategies. Take your roll, dollar cost average 6,500, and then take 500 and try to actively trade, such that if that 500 dwindles down to 300, it's barely any skin off of your back. That's how you learn how to trade. Is with such a small amount of money that it still does matter when you win or lose, but it doesn't cause severe stress and anxiety when a position goes against you. So essentially, if you do have the confidence in yourself to beat the market, then you do just understand that there are going to be winners and there are going to be losers, and the losers are just essentially a cost of doing business, and there's absolutely no reason to feel anxious or angry or upset about the times that you take losses. It's literally just a cost of doing business, and we are just being business people to the best of our abilities. So that is what I wanted to cover on the Bitcoin chart. Taking a look at the time and taking a look to see if Tyler rejoined us. He did not, so we'll just take a quick look at a couple charts very briefly. So the LTC USD pair is one that has been very intriguing to me because we just got this death cross. And in terms of looking to time volatility, this is a pretty picture perfect setup for me. If we're waiting for a market to get volatile, then we can essentially flip a coin. I mean, this market is ready to make a move, okay? And it could move in either direction. And therefore, it is a good spot to consider timing the volatility. So here, you could short due to the death cross and set a stop loss anywhere in the 125 area. And that should be very safe, even if there is a wick above. Or you could long, because the rest of the market appears to be moving up. You set the stop loss below 116. And that's a very attractive position to me. You could wait potentially for a close above this trend line for further confirmation, which would potentially give you a better strike rate, or you could look to enter right now in either direction to give yourself a better risk reward scenario. So right here, we've got a super tight squeeze. I don't even need to look at the Bollinger Band to know that this thing is squeezed and is ready for a move in one direction or the other. If you're bearish, you would call for a retest of 100. That's what I would do. If you're bullish, I would call for probably a new high above 140. And one of the two is going to happen, and it's going to be a good risk reward either way. And let's take a look at ETH. So this is one that was flashing some great buy signals that were really, really appealing to me. But due to the higher time frames on Bitcoin, I wasn't able to pull the trigger and enter into a position. But this is what I really like to see. You get the first test of the 200, bounces up to test the 50, which is rolled over bearish. That holds as resistance. And then you come back and get this second test. This gets a higher low from here, which gets a higher low from here. It looks awful Y coffee. And right here and right here, like my absolutely ideal entries. If I had any confidence in Bitcoin at these areas, then I would have been probably looking to build a position due to how sweet of a setup this was. And again, we're timing volatility in the sense that in my experience, you'll get about 3 bounces while the price squeezes in between the moving averages. At that point, you're either going to continue and break back above, or you're going to fall below and get that death cross. So that is one that had some very, very good buy signals that I was unable to take because I was a little worried about Bitcoin. And that is something that potentially you want to be just paying attention to Bitcoin. When you're wanting to long the strongest. When you're wanting to short, look at shorting the weakest, because bottom line is Ethereum has not been keeping up with Bitcoin. And even though it did have a sweet setup, it hasn't been keeping up with Bitcoin. And therefore, I should have a strong preference to put my money into Bitcoin. Why be an ETH if it's just going to consistently underperform Bitcoin? And that's exactly what it's been doing. And it is really threatening to break down a major area of support. Was watching the close very closely from last week, finger on the trigger, wanting to build a big short position if it could close below 0.025, due to this descending triangle here. Combined with, if you had a different exchange, there's an enormous descending triangle like here. And then this major area of horizontal support right here. If that gets broken down, then I really don't want anything to do with ETH USD, and I want a lot to do with an ETH BTC short. This is an area where everybody's looking at buying. Everybody thinks that this is the major support. Everybody's been accumulating. If that breaks down, there's going to be a ton of selling pressure that I would want to have some exposure to the downside. Last chart we're going to look at is the LTC BTC chart, which is in a pretty rough spot itself. So let's try the daily. That's the 2-day. Okay, so this is got an incoming death cross. Price is extended from it, so I wouldn't consider this an entry signal, specifically because it is kind of at some support here. If it did get a bounce up into here, that could be an interesting spot to sell. Do have the halving coming up, which is why this action has surprised me so much. I thought that this would come, like 2 to 3 weeks before the halving, not like 2 months before. And the 0.01 is the major level for me that this needs to hold. If it doesn't, then I think it should really sell off down to like the 0.007 territory. So LTC, BTC, and ETH BTC are at very crucial spots. And if they are unable to hold support, then they should sell off in a big way. But if they do find support, then that could be the start of an alt season. Again, it's too early to really tell, but it's a very, very good spot to look at timing some volatility. When you expect a big move in one direction or the other, then it really makes sense to go in either way. Like right here, if somebody brought me this chart and said that I'm longing right here, and then somebody else brought me this chart and said I'm shorting right here, I would agree with both of them. There's no way I could disagree. You're both are going to have tremendous risk reward, and you're squeezed into such a tight range that a huge move is coming. And as long as these guys talking about longs or shorts here have good stop losses, both are very valid and feasible. And most people don't think about it like that. Most people are married to alts, and all they're talking about is wait for BTC to consolidate and alts are going to go to the moon, or look at this area of support. This is where alts went to the moon last time. Most people are only thinking about how alts are going to go up. They're not thinking about both directions, or they're thinking about only how alts are going to go down. For me, I'm very much wanting to be prepared for both, and very much wanting to looking at this chart and seeing it as one that is ready to get volatile very quickly, and therefore it makes sense to me to have exposure in either direction. I said LTC was the last chart we're going to take a look at. I fibbed because there is just one more important thing to pull up. See if I can get it in time. Nope, already over time. So this Bitcoin market cap dominance, seeing that major alts are testing major levels of support while Bitcoin is breaking through a major area of resistance, could be foreshadowing something significant. And this chart really kind of looks like the Bitcoin chart that we're just seeing, in the sense that you've got this trend, and then you come up and you test it. It wicks off perfectly. It appears to be creating lower highs, lower highs, lower highs, and then boom, it shoots off with a 50 MA, smashes through the trend, and then is breaking through some horizontals. The next one would be right here. This really looks a lot like the Bitcoin chart by itself. And seeing ETH and LTC at major areas of support, while this appears to be breaking through resistance, that tells me that that's very, very healthy and very a very strong sign for Bitcoin, and tells me that Bitcoin is ready to move up, but that the alts aren't, that the alts are continuing to lag. And if that continues to happen, if alts continue to lag BTC, regardless of what happens with their USD pair, if they continue to lag for another week or two, then those major areas of support can say goodbye. And at that point, they wouldn't just be lagging, they would be dumping against Bitcoin. So this chart is why I am expecting those major areas of horizontal support to break down, but I'm not positioning myself just yet because we haven't quite gotten that final confirmation of potentially that weekly close below support, or whatever it is that you want to wait for final confirmation. And conversely, I'm also very much open to the idea of longing if this just refuses to close below, and we keep getting these wicks and we break through a trend line and get some bullish crossovers on the moving averages. Okay, now I'm very interested in longing. So that is hopefully will help you understand how I look at the charts, in terms of, I like charts that are ready to go in a big way, and I really don't care too much which way. I'm neutral in terms of longing or shorting something. I'm not neutral in terms of the risk reward and the strike rate for something. So if volatility is coming and it's to the downside, I don't care as long as I'm short, and if it's the upside, I don't care as long as I'm long. So that's how I like to think about the charts, and like to look at where I'm looking at entering. So just hopefully that helps you guys to get an idea. And to help you guys get an even better idea, Tyler and I will be doing a webinar about retirement accounts that is coming up on this Friday. For anybody that would like to sign up, come to lucidinvestmentstrategies.com. And then here you can hover over products, and you will notice you get a drop-down menu with workshops and webinars. The workshops are live, the webinars are online. So we go ahead and click on that, and you will see that we have two upcoming. The next one is the second one down on the list, right in here. And it is July 12th at 12 p.m. Eastern Standard Time. And it will be about retirement accounts. The price is 0.01 BTC or 150 US dollars. To learn about what we will be covering, check the details, and it will go over the different aspects of why it's so important and how to most take advantage of some of the different options that are available. And after that, we will be doing an intermediate and advanced Consensio webinar. Tyler and I both use Consensio as our primary tool for identifying entries, exits, and determining the trend. And this is labeled intermediate and advanced. If you don't know anything about Consensio, then you can learn what is necessary beforehand for free on YouTube by searching Deep Dive into Consensio. That is a free video on YouTube. I think it's a little over an hour. Tyler goes over all the subconditions of Consensio, what does signal an entry and exit, how do you use them to determine a trend. If you view that, then you will be ready to go for the intermediate and advanced Consensio webinar. So end shill and end screen share. That will cover everything today. I appreciate everybody who tuned in. Unfortunately, Tyler's internet cut out on him, but fortunately he was first up and had gone through all of his analysis before that happened. So thanks again for everybody tuning in. Keep in mind the webinar that we have coming up on this Friday, as well as the one 2 weeks after. I know that many people are interested to learn more about how Tyler uses Consensio, as well as the modifications that I have implemented. And with that being said, I will go ahead and sign off. I hope everybody has a great day, and thanks again for tuning in. We will be back tomorrow at the same time.